very difficult time, but actually very nice. I mean, initially I was thinking why Akhil is, talking at the time, when things are not looking good or things are not that gone well, and it's still you are making face the client. But I think I'm so happy that this thing is organized, and I've seen investing, uh, and let me just speak. I mean, data you have seen enough of it, and I think let me just speak example from what my thought processes are and how I think. See, one of the things is that this performance, when performance is something on which I don't have any control or nobody has any control. You do things which is right, right selection of stocks and right allocation in the portfolio. And I mean, and as an active manager, finally, you are supposed to be beating the market. You are supposed to be beating the market. Now, we manage the money the way you manage it for yourself. That's how we manage the money. And actually, right from beginning, we were extremely active manager, very active manager. And first 4 years, the same style worked wonderfully well. I mean, it worked so well. I'm telling you honestly. I used to ask one or two IFAs. I mean, how come? Are we that great a magician that you can have 1.5-2% per month outperformance? So I thought it is a magic of QGLP, or so it was magic of style. That time, that style suited in the backdrop of the market. I mean, that's the only explanation I can give, because the style still remains same. I mean, managers obviously, unfortunately, have changed for different reasons, but style is no change. It is the same promise of a very focused portfolio, high quality names, very chunky allocations, and actually, initially, all this data were always available, and somebody was doing the calculations earlier. But I was never looking at, how much is the active portion, how much is the passive portion, what is there in the index. So because I was focused on completely what we have in the portfolio, what is what every individual company is supposed to do. And I used to, even today we appraise it, on a descending order of allocation, and 10% was the max we were doing. And then you have 5-6 companies which are 7-8-10%, and rest all will be 2-3%. And that's how the portfolio will build. That was a style. Even today, that is a style. So we have stuck to the style. And when we look back, we can always say that yes, it went wrong. Like we did one of the largest allocations in insurance, and the COVID hit that sector the worst. So those kind of things. When you look back, I mean, I remember in '92, post Harshad Mehta, my portfolio was built up of only bank companies. In fact, finally, I found that banks were the cheapest in '92. And where was the scam happened? Only in banks. So I had a 67% correction in my portfolio. From 30 crores, it became 10 crores. And on out of that 30 crores, at least 22 crores were only banks. So, these kind of things happen in the portfolio. And these are not, I mean, looking back, we can say, why couldn't we see this is coming? But, a lot of things we cannot see. Like what has happened in 18 months, the mid cap, the roaring mid and small cap rally, unprecedented rally. I mean, promoters themselves don't believe that this has happened. And that has happened because the structure of the market has changed. The structure of the market has changed. And so if you are not, and we are not the guys who have high churn, in the sense that, okay, wind is changing this side. Even if you say, we have not been able to change. I mean, some of the, when I look back 18 months, I think structure of the market has complete change, and it will change even more so in next 2 years when the retail will be fully onboarded. In the sense that right now, 80 million people have come. In last 18 months, 40 million people have come. Half the market is brand new, and other half is going to come in next 2-3 years. That's my expectation. So I'm very bullish on the onboarding of the whole nation participating in the stock market. And the reason is also the collapse of the fixed income, where the yield has come down from 7-8%, 9% to more like 4-5%. So clearly, even the HNIs, the game has become much bigger for them also. So not only the HNIs who are the bulk of the wealth, they are putting in more in equities, but also the completely new set of people are coming and putting their small saving buckets into the market. So the equity has become much bigger game, and we'll stick to the style. we'll stick to the style. And what happens is what I've seen. I mean, I'm getting reconciled to this. It doesn't make me happy to see the performance the way it has shaped up in last 2 3 years. But what happens is that sometimes you are on top of the market, and always you cannot be on top of the market. Sometimes market is on top of you. So first 4 years we were on top of the market, hugely on top of the market. For last 2 3 years, I would say market is on top of us. So yes, manager and environment changes, and portfolio changes happen. And since we are doing a very kind of we are sticking to our style, the way we pick up stocks, QGLP processes, high quality business management, everything. I mean, I understand the investor has to see the measure the performance only in terms of outperformance and underperformance. So I'm not saying they are wrong. Clearly performance has not been up to the mark. Let's accept that, and that allows us to rework. How exactly we see that scenarios in the future, and what all changes do we make. Many times what happens is that you also become lucky or unlucky. As I said, I mean, we had a massive call on insurance, and when I look back, it looks that that kind of active ratio from 2 to 11%, that has not worked for us. But ठीक है, ऐसा मत है, what I'm saying is we have not bought bad stocks, we have not lost money or anything like that. And in the longer run, these things, they even out. I only hope that 2 years henceforth or 3 years henceforth when we meet, we should be on top of the market. I mean, that can only be hope. And I mean, Siddharth is the best talent we have with us. I mean, he's there for 10, 12, 15 years. I learned a lot of things from him. He's intellectually most stimulating. He's the most experienced. And particularly for a large fund, you need a senior guy. So we work together. And so I think we have put best foot forward. Style remains same broadly. And whatever little changes needs to be made, that of course will be made. I mean, there you'll see the stamp of fund manager and individuality of the fund manager. But broadly, it remains a very focused portfolio. It is still bets. I mean, I think last I saw was active ratio was 64%. Now, I mean, it used to be 70, 75% also. We never looked at active ratio. After the underperformance, we started looking at all this data, that how much is the active ratio. Maybe when we performed, active ratio was 90%, 85%. But when you are performing, even if somebody tells you, you don't bother about it. But today, what was the biggest source of outperformance has become the biggest curse and in the portfolio. So I think these things do happen, and same thing doesn't keep working in the market. So long as you are buying the right stock at the right price, I think that's all you hope for the best. So I'm very clear that over a period of time, the compounding will work out very well. I mean, and wherever we have underperformed, we should stay there, and we should not run away, because today it looks unnerving to see the performance, but that's where the patience is required. I mean, whenever, like he showed that subject of Vaibhav Global, when we bought it for. I mean, I remember only market cap. We say we bought it for 2,500, 3,000 crores market cap. It went to 15,000 crores in just 2 years' time. But so we took the benefit of 5x, and we recovered whatever we had invested, 300 crores, whatever put, we got it out. But the correction from 15,000 to 8,000, that becomes part of the problem for this period. And when the misery comes, it comes all together, in the sense that when things don't work out, a lot of these things come together and gives that. I mean, I think IRR was 70%. What more you want from a stock? If you look at from till date, what is the IRR? It is 70%. And I think it is the most wonderful stock, and it is going to do well. But I mean, technically speaking, we should have sold it right at the top, and we should be thinking of buying now rather than holding through the downturn. But ऐसा होता नहीं है. You cannot do it. Buy and hold approach में, you have to go through outperformance as well as some amount of underperformance for the stock to be there, because we don't know which quarter it will again flare up. So these things do happen, and portfolio is very healthy. I mean, I'm absolutely on top of probably this is the only portfolio on which stays in my head, and I literally talk to Siddharth on a daily basis. alternative basis. So, so I think it is all about the style, and we need to give a little more patience, and that's how I think that things will work out fine. And maybe, I mean, even if by chance we double the money in next 5 years, and index goes a little more, then also the world has not come to an end, I would say. You know, and you know, the corrective actions we have taken, the ideas which we have put, some of the ideas which have not worked, like insurance has not worked, or automotive has not worked, or even banking finances have not worked. So these are the main sectors from where we have put the active ratios, and I'm sure these sectors, because if the banking financial services don't work, where is the India story then? I mean, I can't believe that India story will happen without this segments not working. And we have the biggest of the banks; they're all value migrating ideas, all of them, whether it is ICICI Bank, HDFC Bank, HDFC Limited, Kotak Bank, your uh, uh, all the newer insurance companies. I mean, these are the 6, 7 ideas which we have put. So I think they will assert, and they'll when they'll assert, they'll be so big that will not believe that these things are working. But right now, I don't have right to say that it will, because to make any promises in this market, in terms of particularly in terms of underperformance or outperformance, would not be right for me to say anything. But I'm pretty confident that this portfolio will do well, and we'll keep allocating as much as we can, because there are a lot of other products, private equity and other funds that we keep allocating. But we put 100% of our net worth as well as the company's own savings within the mutual fund products of the company, mutual fund and private equity of the company. And the flows could be different at different point of time. So our confidence in the product, the manager, in the future of it is completely supreme. And let's see. I mean, what needs to be done further, and how our current what do you call it, stock portfolio we have built works. And when we come on top of the market, I mean, I would say, I can't say. I mean, actually, prediction is very bad in this particular aspect of it. I would not venture that ये हो जाएगा, वो हो जाएगा. अखिल साहब कुछ बोल सकता है, कोई बोल सकता है. In fact, somebody from Hong Kong, I was actually at the year end, I was telling him, one of the very celebrated manager, कि sir, अभी तो हमारा बहुत अच्छा नहीं हुआ है. This year has been okay, but not great in terms of performance. He said, Raamdeo, I'll bet your house will be the best house in the 2022. I mean, I don't know from where he's saying, what is his analytics for which he's saying, but I mean, see, predicting the performances is becoming very difficult. And but I remain bullish in the market. I think structural change is happening. It is time for India. I think this is the best possible time I've seen. I've been always been bullish, but this is a point of time when people should be allocated in equities, whether F-35 or whatever, and we will have very aggressive positioning for upcoming upturn. So much so that Siddharth has put in ABB, Siemens, L&T, all for the recovery and capex. So I mean, everything we have tried to. You can speak to Siddharth, and even to me also, if there's anything specific which we might be missing here. I mean, past is past. I mean, I cannot repair it. And we have done whatever we have managed. We have managed with same diligence, which has been there since 14. And even actually, the intensity of portfolio monitoring is so much higher today, so much higher for last 2 3 years, that probably that itself might become a problem. So we have to be very careful how much we take care. At the end of it, it is about the process, about the style, and that style remains broadly same. And hope that 22 is a great year for us.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.